In this video, it's kind of a continuation of looking at the ERC, the Employee Retention Credit. And what we've actually done in a couple of prior videos is and this is kind of the summary of what we did in the first video, and we ran the basis to hit a home run of getting a refundable credit deposited in your bank for payroll wages paid. Again, it's money that you can get now. We just did a video and we ran down to first base to qualified business. And in that qualified business, we did the 2020 on how to go back and get a qualified business for 2020. Those rules are different. So here's what I want to do here. Put this aside. Leave the 2020. This is what we did in the prior video. You can go watch that video. Look below in the notes and you'll be able to click back and watch this. And again, if you haven't watched this one and the overview, then you may not be on first base with us. So let's go to first base. We've covered 2020 and the rules there. So now we're going to go to 2021 and we're going to look at the rules on how to get this money. So we're looking at qualified business. If I qualify for this business, and I'll use my age-old example, and that is if I'm paying somebody $15 an hour, through these videos, you're going to know about $15 an hour. For a year, that's about 30,000, rounded numbers, that's about $30,000 a year. In 2021, if I'm paying somebody $30,000, that one employee, that credit could be up to $21,000. So right now, let's look at qualifying. See if we qualify in our business in 2021 again, so we can run the bases. We have to touch each base, as Laura keeps telling my grandson. You can't run to third and back home to get a home run. You got to touch first, touch second, touch third. So now what we're looking at is 2021 and how am I an eligible employer? So qualified business, or we could say an eligible employer. So for January 1st through December 31st of 2021, we have a test. We have to do one of two things. We either have to be partially or fully suspended because of national, state, local suspension, partially or fully shut down. If we qualify for that, then we look at each quarter. This is a quarterly test. Or, as we found out over in 2020, the number changed. In 2021, it is a 20% decline in gross receipts. Much easier tests to meet. Mm-hmm. So with that, we're going to look. I, as a small business owner, did either one of these things happen? If it happened in a quarter at that point in time, so this is a test again, the test, then what do I get? What's my money? Mm-hmm. And it's a refundable credit of 70% of qualified wages, which we will define in the next video at second base. But right now, qualified wages, and it's on 10,000 of qualified wages per quarter. In 2021, and that's why I kind of left this sheet up here, is the fact over here in 2020, it was 50% of 10,000 for a year. That's 2020, 50% of 10,000 per year. Over here, it's 70% of qualified wages of 10,000 per quarter. So let's think about this. If I take each quarter, that'd be 10,000 times 4. That's 40 times 70 means it's possible to get up to a $28,000. If I'm paying somebody $40,000 a year, it's possible to get a $28,000 refundable credit. It'd be $7,000 per quarter. 4 quarters would be $28,000. Why would I not want to run these bases to see? I've got to, again, get to qualified business. So the important thing about that is that this is what the small business person gets. Now, let's look and let's draw a timeline.
Now, what if I got PPP in 2021? That PPP2 came up and I got that.
Okay, so we got, great question. We got PPP2. Well, let's start out and in this timeline. Here is January 1st. Okay, PPP2 came out. Let's say I got it the last week of January. I'm going to change color. So here's our PPP. we got it the last week of January, because this is first quarter, this is second quarter, this is third quarter, and this is fourth. Okay, so this is, and I'll put out here, this is for the year of 21. What happens is I get it, and the PPP is going to be in this color. So we qualified, and let's say, and again, according to PPP rules, you qualify and use wages. So whatever wages they use, let's say they get out here and they get just beyond in July they used up. So this is PPP. Those wages we're going to find at second base, up here at second. The wages here that we use for PPP do not qualify. But the wages from January 1st until the deposit is ERC, and after to the end of the year is ERC, as long as we qualify as a business. And again, how do I qualify that? We can look at our test. So I'm going to go down here, draw the same timeline again. Okay, first, second, third quarter. What happens is, up here we're looking at, you can't double dip the wages. But down here what we're looking at is we're going back and saying, okay, what's our test? Well, in the first quarter, we dropped below our 80%, or in other words, our gross receipts went down. This is confusing, down 20%.
And gross receipts is the money you make before you take any deductions. So it's
Right,
your total amount of income.
It's our total amount of income. And so with what, in that you include all your income and look at your test. And what happens is you compare it to 2019 and you look to see, and there's a special of with 2020, but the point is you meet that 20% drop, then we qualify in that quarter. Now, if let's say we did it in first quarter, so this is first, we would get this 70% of qualified wages. So in that case, in our example up here, we would, from January 1st until we got our PPP, and we qualified as a business, we would get 70% of those wages there. Now, if we didn't get a PPP, guess what? We would qualify in that quarter, and then let's go so that quarter, we go to the second quarter, we get the quarter, in that quarter, we went above 80%, we still get the quarter, we go above.
Okay.
But we get in the second quarter, we didn't go above, then we would move it out to the third quarter to see if we went above. So this is a quarter by quarter test. And the thing about it is when we run the bases and we're a qualified business in a quarter, we have qualified wages we've turned. We get over here and our 941X now for 2021, we now can use the 7,200, the advance refund, or we also will use a 941. So it's possible right now that you figure out you qualify and you have already filed your first quarter 2021. We're going to do an amended return for first quarter, a 941X. We're then for second quarter, we can start using a 7,200, and we'll go into more depth over there, but it's the fact that you can get it now, deposit in your bank without waiting to the quarter. Again, this whole thing is about how to get it deposited in my bank now. Where's my money at? And then if we're using the 7,200, at the end of the quarter, we'll reconcile there. But we'll cover that over at third base. So back over here at first. So we're going to continue to qualify each quarter. Now, if we do this qualification, and let's say the first quarter we qualify, second quarter we go above the threshold, we'll get first quarter and second quarter. But let's say we don't get back above. The pandemic in some places has hit again. So at that point in time, we didn't hit in second quarter. We were still below the threshold. Then we get third quarter, and we go back above the 80%, we'll get it for first, second, and third quarter. So in that light, what we'll end up doing is we'll get it for first, second, and third quarter, and we again can file the 7,200 or the 941s for that. Now, or as we saw over here in 2020, or we were partially or fully suspended, and this has happened on the West Coast a lot. So if we're partially or fully suspended, we don't have to meet the test. It's or. And at that point in time, though, this is quarter by quarter, okay? quarter by quarter. Whereas this one is the quarters you qualify in plus the quarter you no longer qualify. So you get an extra quarter. So with that, what happens is we now, and again, we now are able to get that refundable credit now deposited right here. This is the home run, deposited in our bank account. It's money now. So I realize this is very complex, and in our next video at second base, we're going to be defining qualified wages for both years. But when you tell me that I could pay somebody $40,000 a year and I could potentially get $28,000 of it back, we're talking about one employee at $40,000 getting $28,000 deposited in the bank account real quick, then I don't know why we're not seeing if we can. And I've mentioned this before in another video. It's spring, and I have done 2 or 3 live presentations to small business and to practitioners. And what I'm finding is this is kind of unknown. Everybody was so focused on PPP. And what happens is I've actually had a couple times that clients have looked at the PPP. We saw that. We tested it, PPP versus ERC. And I know of 2 cases where they're going to pay back the ERC and not ask for forgiveness because this 70% is a greater amount of money. But again, because of the law change December 27th, we, for 2020 and 2021, can get PPP and ERC as long as we're a qualified business and we don't double dip. Any takeaway? Boy, that's a reply from small business and a payroll person. No, but it is. But it's worth, tell me how. Think about it. So we're getting calls every day now. We're needing help with the 7200. We're needing help with amending returns. We need to know how to qualify. And that's what really kind of helped me put this running the bases all together. So what I'd like to do is say we have now completed 2021 running our home run. And again, home run means how do I get the right amount of credit in my bank account to run my small business so I can stay alive. In our next video, we're going to run up here. We're going to go to second base. We're going to talk about qualified wages. And you know what? Please hit the bell, subscribe, and I'll see you at second base on qualified wages.
Hope this helps.
Good luck getting through qualified business. See ya. Thank you.